with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, the Direxion Triple Leverage Semiconductor Bullish ETF, which goes by the ticker symbol of SOXL. Make sure you're following us on X at the handle Bullish Chips. That way you stay up to date with our real-time entries and exits for not only scalps and day trades, but the mid and long-term swing trades we enter as well. Make sure you hit the subscribe button and the notification bell. That way you're alerted whenever we release new videos. We do release videos nightly throughout the week and once on the weekend. So go make sure you subscribe and hit that notification bell so you're alerted whenever our new videos drop. If you happen to like the video today, don't forget to like the video as well. But we do want to take this time to remind you that we're not financial advisors. We do not offer financial advice. But what we do offer is our view of the price action for SOXL, not only in current day's price action, but price action in the past, as well as where we think price action will take us in the future. So without further ado, let's get to the charts. As you can see, we're up here on the day chart and had kind of a nothing burger of a day, if we want to call it that. It was an inside day. It did try testing both ends of yesterday's candle, the high and low, but just couldn't quite make it either way. I'm going to keep this analysis kind of shorter tonight just because of the type of day that it was, the inside day, excuse me, but also I won't be trading tomorrow, and I have some things to take care of tonight before I head out in the morning. So no trading for me tomorrow, and our Twitter will probably be pretty quiet as well. X will probably be pretty quiet as well. I may shoot out a couple things here and there when I have the chance throughout the day, but a lot of times I like to trade very light on Fridays anyway, if I do trade at all. So for me, it's just par for the course. But as this is a new channel, I just wanted to let you guys know that I won't be with the live tweets tomorrow as far as entries and exits on scalps and day trades and things like that. So just try and pay attention to the analysis tonight, watch tomorrow and make sure it pans out the way that we think it will, and then I'll meet back up with you all on the weekend with the longer weekend video recapping the week and getting ready for the week ahead. So just back to today's chart. Once again, we had the inside bar. We did finish red, but it's a doji. It negligible as far as the open and close. Open was 25.66, close was 25.62, so 4 cents, nothing major. As we talked about before, we have the broadening formations that are tightening. You can see previously in the past couple weeks the daily broadening formation was pretty wide, so we could expect some pretty big volatility, but we pointed these out yesterday. We drew them yesterday and pointed out how they are narrowing, so today wasn't too much of a surprise. I was looking for more of a bounce to go get back up to the middle of this range, possibly back to the top of the range, but we kind of stalled out today. So let's zoom back out just a little bit, but again, the same levels that we've talked about in past videos are holding true right now. So we haven't even been able to close above the year flip yet. So this 2813 will flip the year back green. If you look here in the upper left hand part of the screen, we have the day, the week, the month, the quarter, and the year. Right now the month and the quarter are green, full time frame continuity to the upside if you're just looking at those two. But if you're looking at full time frame continuity from the day to the year, those are the only two that are green. If we flip the year green, the week is also going to be flipped green as well. And on that day, if we're flipping the week and the year, that day would be green as well, which would give us full time frame continuity to the upside, which would give us confidence for longer plays. But right now, with the mixed continuity of the month, the quarter, the year, and the week, we can expect more choppy action just looking at time frame continuity. But again, the year flip, the monthly downtrend line, which is this green dashed line, and the weekly broadening formation, which is this purple solid line, all kind of converging right here. So we knew we've been talking about for over a week that gonna have a fight right here, probably get some sideways action, if not a bigger pullback. So today was kind of the first real hint at possibly not bouncing back to the top of the range. But we can't count it out. If we look back a few days, we had another candle similar to it, and we opened gapped up the next day. Now price action pushed us back down because we had hit the top of the range, but we did still have the push up at the beginning of the day. So could we expect a push up at the beginning of tomorrow? Possibly, but there's not a whole lot telling us yes. A lot of things were neutral. Let's go ahead and take a look at our internals for the Qs for QQQ. I've got the chart of TQQ right here. Let's put SOXL in here so that we can properly match things up. Let's get AutoZone. All right, so here we are today. This is a 15-minute chart. So you can see how we had the push down, we had the push back up, and then flat action, and that's represented pretty well in the internals as well, right? So the push down, we were already in neutral territory, or almost trend lower territory, so that makes sense. We opened down in trend lower zone, we're going to trend lower. It slowly pushed its way back up to the zero line, and we got the push back up to overnight low opening print. Ticked up a little bit over the zero line, pushed back down, ticked up over opening print a little bit, ticked back down, went back up over zero line, ticked back down, went back up over, it just follows it, right? ADQD, it was negative all day. That's what we can say about the tick too. Cumulatively, it was all below this zero line. Very little action was above the zero line, and we were touching the trend lower zone. So it's not surprising. We could have actually trended lower than we did today with all these touches to the trend lower zone, but we got the sideways action. ADQD, which is breadth, it was pretty much horrible all day. Well, I wouldn't say horrible, but we were negative all day, and then almost got to trend lower zone a couple of times. So pretty close to horrible. Volume, we had inflows, but it was nothing major, right? We were still close to the zero line, not even close to 400 million up here, right? We just played with the zero line all day, and by the end of the day, we ended up negative. So it's a surprise, kind of a surprise we didn't finish a little worse than we did today, but it shows the strength of chips and tech right now. Still coming into the end of seasonality for tech, so it looks like it's trying to finish strong. We're not getting that push up, but we're also not getting the pull down as well either. So, just continue to take it day by day as it continues to range here. But been in a range since mid to early June. So, just try and continue to respect the price action and the range that it's in, along with the major levels that we have out here, and just know that it's going to be a fight. So that's why right now we're doing a little bit more scalping than we're used to, but it's what we're kind of doing to just get a little bit of profit daily while we're waiting for the longer swings that we have to get better movement with them again. With this sideways action, they lose a little bit of money one day, they gain a little bit of money the next day. They're just moving sideways. So to try and, I don't want to say make up for, because we have great entries, we're already up very big on a lot of our swings, but just to try and get a little bit of profit throughout the week. We've been doing a little bit more scalping and day trading. We got in, I'm just getting in here on the micros because we did get in on a call today and made some money. We bounced off of this 25. Round numbers are pretty, SOXL respects round numbers pretty well. So when you get to those 24, 25s, 25, 50, 26, 26, it kind of plays around at those a lot more. And you can kind of see that 20 we bounced off of and got back up to 25.50, and we kind of stayed around 25.50. So that's another thing to kind of keep in mind with them. We did take the bounce off of here It wasn't any type of real trigger. It was more off of feel, and looking at internals and knowing major levels of support and whatnot. So let's take this back down to a day, and we can see, you know, previous low a day, last week's low. Those types of things are down here. We bounced from this level yesterday, you know, did basically bounced off of this level the day before, a little bit higher, but went ahead and dipped our toes into some calls just to scalp, and we took them on up to overnight low. Wanted to take them to opening print, but we ended up selling. You know, we kept a pretty tight stop on them, and we sold them up here around overnight low. So we took that. We did end up, I think it was on the 15, taking. Oops, that's the 1 hour. 15-minute. We took a higher low, if I'm not mistaken, and tried to get back in again. Yeah. So I think it was. We'd have to go back and look at our X account, but somewhere in here we took a higher low, went against us. We took a small loss, no big deal, but we still have our puts in hand to hedge the longer term swings that we have. And yeah, I mean, other than the morning, it was pretty much a sit on our hands day. Didn't really do too much. The day didn't really do too much, so there wasn't much to do. You know, we took this opportunity to go look at some of the other investments that we have. I did add a couple of shares and to a couple of positions that I have for positions that were kind of down relative to the rest of the market. The whole market as a whole is kind of on a tear, so just kind of looked at the rest of my investments. You know, keeping tabs on those, and that's what you can do with days like these. Yes, you can make money every day, and I mean, if we really wanted to, we could have loaded up on contracts and been on really short-term scalps in here, because there was action in a defined range throughout the day. Once this high and this low were established, you know, you could still capitalize off that. I've done enough scalping as it is, so I just kind of left it alone and just watched my long-term swings and my hedges, and just, you know, eyeing up how the day ends. That's the main thing. How the day ends as a daily candle will tell you a lot about what tomorrow will bring. So yeah, with that limited action, we'll go ahead and set up our 4-hour markers. So let's get rid of the opening print marks for today, because those will be of no more use. Let's get in here on the 4-hour chart. Zoom in a bit. I know this one's a little messy, but we got to get it done. We got to get done what we've got to get done. This is all part of the method, right? So we'll take the previous high a day, move it to today's high a day. All right, we'll take the 4-hour trigger to the upside and move it to the high of the second 4-hour candle for today. We'll do the same with the low, or I mean the down trigger. We'll move that to the low of the second 4-hour of today, and we'll take the previous low a day and we'll move it to today's low. And you know, for anybody who wonders why we're setting these up how they are, and you know, you're kind of new to the channel, check out our YouTube page in the bonus content, and you'll find a couple of videos on how we set up our charts, and one, you know, I think it's titled like precision trading or something like that. That tells about the 4-hour levels. But real quickly, I'll just go over that because this has been pretty brief today. We'll just take it even down to the 5-minute, because it shows it even more when you're on a scalping level. But you can see how these levels come into play, right? So regardless of what time frame you're on, you can kind of look at them and see. Let's put the opening print back on here. So opening print today was here. Okay, so you can see how at open we lost opening print when we lost the overnight low. Right, so this dashed blue line is the overnight low. We lost that, so we knew it would be a good chance to get in puts. You can get down on like the 1 minute if you wanted to catch your higher low, but you can see how it somewhat respected this 4-hour down trigger. It did trigger it down, but when it pulled back up, it rejected off of what? The overnight low. Went back down, bounced off of the 4-hour, went back up to opening print, rejected off of opening print, and went back down. Once we knew we broke the 4-hour and stayed below it again, especially with this lower high, we could expect another thrust down to possibly the previous lower day, because that's the next 4-hour marker that's in the line. Didn't quite make it to previous lower day, but got pretty close. Went back up, and you can see we played around a little bit at overnight low, went back up to opening print, bounced around between the two, went back, tested the 4-hour down trigger, went back up, and just played with those levels the rest of the day. So again, if you want more detail on that, visit our YouTube page and the bonus content, and you'll find our videos with how to set up these levels and use them for scalping and day trade opportunities. So go ahead and remove that opening print once again and get these levels moved on the day trade chart. So I have a scalping chart and a day trade chart. The scalping chart has a little bit more Fibonacci's and things of that out there that I use on a scalping to give myself an edge with scalping. It may not be everybody's style, but it's the style I use. I don't need EMAs and MACDs and RSIs and things of that nature. By default, it's this volume and RSI are on my charts, but I couldn't tell you the last time I looked at them. And I've established a consistent trading strategy with these, so I'm not as concerned about all that other stuff. And since it's working for me, this is what I'm out here trying to let people know about. Hopefully it can work for them as well. Let's go over to our swing chart. We already took the opening print off of there. So we have our 4-hour. Before we make our notes, let's go ahead and just look at the week. Just make sure we zoom out, keep everything in perspective. So the week is still a 3. We haven't got that hammer up that we talked about possibly getting to make it more of a bullish 3. So it's remaining more of a bearish 3. But we don't see this engulfing 3 and just automatically think, oh gosh, we're filling this gap. We're going to fill this gap. We're going to test this. No. This gives us an opportunity for a 3, 2 down next week, possibly failed 2 down, and the following week a 2 up to go back and try and test this year flip. It's a possibility, right? It's a strat, and it's one of my favorite strats to trade is the 3, 2 down, 2 up, or the 3, 2 up, 2 down. It gives you very defined entries, exits, and a lot of time it gives very good magnitude. So I'm going to be looking for that first, especially because of the longer term, uptrend that we're in. This was 7 straight weeks, green action. Doesn't look like we're going to get the 8th straight week, which is totally fine. We don't need 8 straight weeks. In fact, a pullback would be nice to give us a little better entries if we're going to continue to move to the upside. But if we don't get the 3, 2 down, 2 up, we have our defined targets. We have our daily broadening here, which lines up with the gap from 4 Mondays ago. And if we get down lower on the swing chart and things like that, we've got other markers. But from a week perspective, let's just try and keep everything in perspective. It is a red engulfing candle, but it's not the end of the world or anything like that. So let's just keep a perspective. So let's get back to the 4-hour and set up our targets. Oh, we do need to check out the expected move for the week. So let's get out here and we'll go trade. So if we go to the options chain for SOXL, right? If we look at this week's expiration, July 25th, which is tomorrow, we see the expected move is $1.01. $1.01. So we had a closing price of $25.62. Let's go to our notes. First, let's make a new note for Friday. July 25th, where there will be 108 trading days left. The notes are from today, the 4th. The closing price, again, is $25.62. So, didn't really go anywhere. And our expected move for the week is $1, and 1 cent. So, 25.62 plus $1 and 1 cent is 26.63. Oops, if I can type. And then 25.62 minus $1 and 1 cent is 24.61. So we have our expected move for Friday. Let's go ahead and copy that so that we can go to our chart, and let's take that back down. Let's go ahead and look at, take this orange box. This is our expected move for Friday. Alright, so we'll fill in the correct numbers, and move this to the right date. Okay, and you can see our expected move for Friday. It looks a little skinny, so I think I need to, did I mess something up? So, let's go to, okay. Oops. Edit, I went the wrong way. Okay, there we go. So we can see tomorrow's expected move is here at the bottom of the week's expected move, right? This purple box is the week's expected move, and you see Monday's action, Tuesday's action, Thursday's action, Wednesday's action, Thursday's action. We've all stayed within this expected move, and it doesn't look like we'll extend below it just based off of Friday's expected move. Sometimes you'll get that overlap where like the expected move might start here and end down here, so you would get a push out of the week's expected move. It's not uncommon, but that doesn't seem to be the case today. I mean, this week. So we've got our expected move for Friday. Should be somewhere within here. Let's go ahead and change it on our other charts as well. All right. This just makes it easier for me. Alright, and that one is moved, and let's go to our scalp chart and do the same. Alright, and move the date, and we've got our expected move for the week. Cool. So let's go to our day trade chart. That way we can get all our levels plotted for our notes. So we're sitting here on the 4-hour chart. We know that if we go to the downside, it will be a 2 up, 2 down. Trigger being the low of this candle, which is 25.44, with the magnitude of the low of this candle, which is 24.95. So we've got our trigger of 25.44 with the magnitude of 24.95. Alright, we can have some extended targets here. We'll probably just leave the ones that we had. 24.38, 23, yeah, those should be fine. Because again, today didn't go anywhere, so yesterday's triggers and targets are going to be darn near the same as yesterday's. So that would have been a 2 up, 2 down. Tomorrow, if we go to the upside, would be a 2 up, 2 up on the 4-hour. The trigger being the high of the second 4-hour of yesterday, or I'm sorry, of today, which is 25.79. Alright. And there's no magnitude because it's a 2 up, 2 up. But if we look at the 2 down combo 2 up, we've got a magnitude of this candle, the high of this candle, which is 25.91. 25.91. And we can use an extended target of, let's see, let's pull up the scalp chart just to get some different levels. Okay, so there's not really much more. It's really that 50% of last week. looks like this one, for whatever reason, didn't go down far enough. There we go. So once we clear here, maybe somewhere around here, you know, the open of this candle, 26.22 can be a good target. But I would expect it to kind of blow through that. There's no real hard target that we have that's like left over from somewhere, right? It would be something new if we drew new like Fibonacci sequence for this high to this low. I'm guessing there'd be something here. Let's go ahead and just take a look. Yeah, so basically right at right here at the open of this candle, this 26.24 would be a 38.2 fib. So 26.24, we've got 26.22, no biggie. Looks good. So 26.22. So our next would be this 50% of last week, 26.69. 6.69, and we'll give it one more extended target, maybe the high of this candle, which is 27.01. Again, it tends to like round numbers, or buyers and sellers tend to like round numbers, so 27.01 seems more than reasonable. All right, so we have our higher highs on the on the 4 hour, 27.90, 28.46. So we probably should put that one in, but we're real close to it. Here's the higher high on the 4 hours, 28.5. Are we not up to date? Yeah, we didn't keep up with those. So again, that's a higher high hitting another round number, 28.50. So you know, those 50-cent and dollar markers are very reasonable. Let's go ahead and set up our day triggers. So because the high of today was also the high of the second 4 hour candle of today, that trigger for the 4 hour is also going to be the trigger for our day. All right, so we got our day here. The magnitude of the strat on the 4 hour would then become the trigger on the day. So we can see the completion of the strat on the 4 hour would be a 2 up, 2 down, which would take us to the low of this, which is 24.95. And if we take a look on the day chart, we can see the trigger on the day to the downside. So here's the day, it's 24.95. So this would give us a 2, 1, 2 down. Not much magnitude, but it is a strat on the day as well. So let's look at failed 2 down, red 1, 2 down, trigger being 24.95. We need to put a magnitude in here since it's going to be a strat reversal and not an extension. So the strat would complete here at the low of this candle, which is 24.84. 24.84. So that doesn't give us a lot of magnitude, you know, 11 cents, 24.95, 24.84. So you know, we would really want the to get some continued extension there. What it would do is put us back into this red 3 that triggered previously on the week. It would put us back into the red 3. I mean, it's still a red 3, but it would put it in force, right? Price action went engulfing, right? It went past the low of last week's low, but we went back up into last week's action. So right now we're in last week's price action. If we just take a look at the chart, so I can do that, makes it a little bit easier to, right? So, you know, here's the close of today. Yesterday, last week's price action went as low as 24.91 right here. So we close still within this price action. If we get down below here, then we're back in force with this 3, right? So that's what we would want if we're going back to the downside, which that triggers at 24.91. But for now, we've got our trigger of 24.95. It would reach a strat at 24.84. At the same time, triggering back in force the red 3 on the week. And then we can start looking at our extended targets right here, right? those kind of match up with those. So let's make sure we've got the day to the upside marked properly. One day, so this would be a 2 1 2 up. Let's go back in here. This would be a 2 1 2 up. Oops, we're zoomed in too far. That's too much. That's too much. Just trying to make it clean so you can see it, right? So this would be a 2 1. We get past this high, we target, or we have a magnitude of this high, which is 25.91. Right, so 25.91 is our target. There's no magnitude because there's no strat to be had. It's an extension. But that would then put us into a 2 down combo 2 up. So the magnitude for that would be the high of Wednesday. I'm sorry, a high of Tuesday. This candle right here, right? We trigger back above this candle, but you can see we've got a lot of overhead supply and levels that are resistance. We'll call them resistance levels that we'd have to fight through. Not saying that we couldn't, but it's also no wonder that the market's expected move for this stops basically at last week's 50%. So that would be the magnitude. But we're going to look at these targets here as more of the targets that we need to be looking at, and we'll just take those from here and mark them here. All right, so there's your levels that you have for tomorrow. Again, this is not trading advice. This is just my method of coming up with a repeatable plan that you can execute, and if you follow the rules, keeps you with consistent profit. No, you're not going to have 100% winning percentage. There's very few people that do, and the people that do just take less trades, right? Just wait for A+ setups, which is fine. That's what we like to do with our long-term swings. But when we want to try and make a little bit of money on a shorter term time frame, we're willing to take up a percentage of our portfolio. This by no means are we trading our whole portfolio on SOXL short-term options, but we're willing to take a small percentage of our portfolio to put towards trying to make a little bit quicker money. So this is my method. This is what has had me consistent for years now, and it has me starting this channel. I guess I had got to a point where it almost feels like a game, and I just wanted to not only put a little bit more pressure on myself by starting this channel, but trying to help some people out there make money on a consistent basis as well. I've found very few other tickers, whether it be ETF or individual stock ticker symbols, that have the liquidity that SOXL has, but has the as high of delta to low theta ratio that SOXL has for the price that it is, right? So you can find a lot of others that have great delta to theta ratios, but a lot of times they're a little bit more expensive. SOXL, for whatever reason, until they smarten up, I'll continue to trade it daily because it's so cheap that you get so much bang for your buck. SOXL is a high beta ticker symbol. It's semiconductors. It's a high beta segment of the market, and so for the amount of money that you have to put down to risk for the reward that you can reap with SOXL and a proven strategy, repeatable strategy, I just find it fun, and I wanted to let people know about it. So I hope today's video was helpful. Remembered how we ended today, what happened today, pretty much a nothing day. We're still within a range. We're towards the bottom of the range. So even if we get upward movement tomorrow, we still got to expect some resistance towards the top of the range when we get there, whenever we get there, whether it's tomorrow or next week. So just stay on your toes, stay nimble. Don't trade if you don't want to. There's no if you're not a scalper, if you're not a day trader, and you wait for trends to build, or you like just getting in at very low entries to value wait for those. You don't have to trade every day. This is just something I personally choose to do. Again, you trade at your own risk. I'm not a financial advisor. I'm just trying to put something out there that I think might help people build their trading strategies as well. So if you like the video, hit the thumbs up button. Leave me a comment. If you have any questions, leave it in the comments. I'm always checking to see if I can answer anyone's questions. If you have any criticisms, I'm open to those as well, as long as they're constructive and respectful. I have no problem with it. Everyone has their own opinion, and I can't be mad at you for having an opinion that you have, especially if it's laid out in a respectful manner. We can choose to engage and have a conversation if you'd like. I'm always open to that as well, but I'm always open to seeing other people's opinions and their views as well. I think that can only make you a better trader, better person overall, really, if you're willing to embrace those. So hit the like button, make sure you're subscribed to the channel, hit the notification bell so that you're alerted when we drop the videos. Have a great trading day tomorrow. Again, I will not be trading tomorrow. I won't even really be at the screens. I'll be checking my phone from time to time, but I won't be making my real-time tweets about what I'm entering, what direction, how long type of things. But I will be back in full force on Monday, but also keep your eyes open this weekend for a video recapping this week and then preparing us for the week as a whole, and starting to get prepared for the month of August, because we will switch over to August through midway through this next week. So stay tuned, and I wish everyone good luck tomorrow's trading.